Gold has smashed through its all-time high again, and the world is watching. But while the headlines scream and accord and social media goes wild, smart traders know this moment isn't about hype, it's about opportunity. Every time gold breaks a new high, it rewrites the rules of global money flow. It's a signal of fear, of inflation, of central banks losing control. And if you understand how to read that signal, you can position yourself where others panic. Today, let's break down what this gold surge truly means. Not for spectators, but for those who trade to win. Number one, the psychology behind the rally gold doesn't rise because it wants to. It rises because people no longer trust what they're holding. When the world starts doubting the system, paper currencies, central banks, or political promises, they run to safety. And safety, for centuries, has been spelled GOLD. Look back at every global crisis, 2008, 2020, or now. Inflation spikes, geopolitical tension rises, and suddenly gold becomes more than a metal. It becomes a vote against chaos. That's why traders need to understand the psychology driving this move. The crowd isn't chasing profits, they're escaping uncertainty. And if you can spot that shift before the crowd, you catch the wave early, not at the peak. So stop watching gold like a chart, start reading it like a fear index. Because gold's record high isn't random, it's emotional, political, and deeply psychological. Number two, central banks are buying, not selling, while retail traders debate signals on YouTube. Central banks are quietly stacking gold bars. China, Russia, and even emerging economies are hoarding physical gold like they know something we don't. Why? Because gold is independence. It's the one asset they can hold without relying on the US dollar. The more they buy, the less they trust the global system built on fiat currency. This is your biggest clue. When institutions that print money are buying gold, it's not a bullish H sign, it's a warning siren. They're preparing for a currency reset, a de-dollarization era, or at least major instability. Traders who ignore that trend will be caught off guard when the market turns. Remember, big money moves first, news follows later. If the Bank of China or the Bank of Russia is accumulating gold, it's not for decoration, it's strategy, and we must think like them. Number three, the technical breakout. On the technical side, gold's breakout isn't a fluke. It's been building pressure for months. Every dip was bought, every resistance was tested, and now we've got a confirmed breakout above previous highs. Traders who understand market structure know what this means, momentum. But here's the trap. The higher it goes, the more late entries will FOMO in. The market loves trapping emotional traders. If you're chasing every new candle, you'll get burned when the pullback hits. The key here is to let the market breathe. Wait for confirmation on the retest zones, the P, previous resistance that could now turn into support. Gold DXY, they're the heartbeat behind every candle. When gold moves, it whispers clues about what the smart money is doing across the board. Follow that, and you're not just trading, you're decoding global sentiment in real time. Number five, what comes next? The million-dollar question, can gold go higher? The answer is yes, but not in a straight line. Expect volatility. Central banks, inflation data, and upcoming rate decisions will decide how far this rally runs. But here's the truth. The narrative has shifted. Gold is no longer just a safe haven. It's a rebellion asset. Every breakout tells the same story. The world is questioning the value of paper money. Whether you're trading XAUUSD or GBPUSD, remember that fundamentals are aligning with psychology. This combination creates explosive opportunities if you stay patient and disciplined. So don't get emotional about price. Focus on reaction zones, volume spikes, and sentiment shifts. The world is turning to gold because eyeing, and in markets, trust is everything. At last, I say gold hitting an all-time high isn't the end of the story. It's the start of a new chapter. The market is telling you something, fear is rising, and value is shifting. As a trader, your job isn't to celebrate the move, it's to understand it, adapt to it, and profit from it. While the world panics, you analyze. While others chase, you prepare. That's the mindset of a true trader. Patient, calculated, fearless.